Okay, so I think I have pretty much similar views on the dollar yen as to Lloyd. So I'm going to start there first. Now over here I have a chart that has a dollar government bond, 10-year government bond yields, as well as the USD JPY. I'm on a weekly time frame, and there is a correlation between USD yield rates as well as the USD dollar yen pair. All right, so the US 10-year government bond yield currently closed last week at around 4.795%. And then I think it's just popped 4.8% on the trading view chart. Now the 10-year versus the 2-year bond spread is about minus 20.6. Central bank rate is currently 5.5%. The yield curve is not quite inverted at this point, and there is an analysis that the market is still pretty bullish in terms of where the dollar is going. Now, while the US dollar yield has been very high, what is kind of interesting is if you look at this USD government 10-year chart, right, you can see we have reached the highs of just prior to 2008. And if I zoom out a little bit, we can actually see we're not actually at its highest point yet, which means there's still a probability that price has a propensity to go further higher in terms of its yields. Now, while I don't think it will hit a 6.6%, I think 6% is a bit far-fetched, but at 4.8%, it's a possibility of hitting at least a 5%, which just means a little bit of a pop towards the upside. Analysts are making statements right now saying that the inflation is kind of lowering. If you look at the US inflation, it's now 3.77%. I'm going to click in here. All right, it's 3.7%, which is still a kind of 0.5% increase in the last reading. So actually, inflation has kind of popped up a little bit. All right, it hasn't quite gone down to its previous marks. If I do a 10-year, you can see prior to the COVID 2019-2020 period, the inflation measure is somewhere about 2 to 3%-ish. 2% is a mark that the Fed is trying to get at. So with inflation still here looking to pop up towards a little bit more, I doubt that in the near term, they will kind of reduce interest rates. I think the Fed has more probability they're either going to keep interest rates the same or maybe have one more rate increment towards the end of the year. Some analysts or some websites are saying that they may actually pop the yields slightly above one more time in 2024. All right. So all eyes are on the yield curve in that sense. So if we are talking about the yield curve continuing to strengthen, now for the dollar yen, I think there is still a little bit of room towards the upside. Now over here, the dollar yen, and if I just line it up a little bit, so I'm running up the number of years. So 2018, all right. So I'm running up the years. You can actually see that it's a little bit of a correlation towards the yields. I'm just going to go to a daily time frame just to kind of have a bit of a closer look towards the current yield rates. All right, so this is slightly the daily time frame. You can actually see there is a small slight correlation towards the yields. Now, while it's not exactly correlated, but the general direction is kind of correlated. All right, you can see the uptick over here. You can see the dip over here preceded by the dip over here, and then bullish. So the USD government bonds as a dip over here as well, and it's kind of a so while it's not 100% correlated exactly at any point, for the large amount of general direction, there is a slight correlation towards it. All right, and this is what I'm actually looking at. So I'm going back to a single charts for now. So if we look at the dollar USD 10-year yields just on its own, all right, it recently has just hit a high point at almost 4.9%, bounced back out, closing at about 4.8%. Now, this is an interesting space, all right, because if markets are worried that the USD, the Fed will start to reduce its interest rates and starts to push interest rates towards the bottom over here, then we should see a slightly weaker US dollar coming in soon. But based on the statistics that's out right now, I think what we are seeing here is we are seeing a test of this high level. What I do expect the US dollar yields to go and probably going to sideline for a while the bulls and the bears are fighting towards what exactly or which direction the government will actually go in terms of the yields. Now, based on a sweep through of a lot of these articles that have come out, there is still there is still more weightage towards a potential of either a rate holding or a rate increasing. All right. which means, right, I don't think the US dollar will weaken anytime soon, at least for the midterm. So with that in mind, okay, even though we are facing a double kind of a you kind of a double testing of this 4.9% in terms of the yields, I do think that this is like a kind of a consolidation point where the market is trying to figure out whether or not there is another room for one more pump towards the upside. So if I go towards the USD 10-year, USD yen, all right, this is where I would say my analysis is very similar to Lloyd's. I do feel there's a little bit of upside. We have had an attempt where price hit 150 on this day. I think this was last Tuesday, right? Price hit 150 and then a knee-jerk reaction. A lot of analysts were thinking that, you know, the USD, the Japanese government will do something because it has hit its previous high over here. So it has hit its previous high over here. Knee-jerk reaction going down, but look what happens straight away in the same day as well. A lot of upward pressure still over here. All right, a lot of upward pressure still telling these guys that, hey, they're not ready to kind of go down yet. There is still a little bit more space to the 150 mark. I will be a bit cautious as long as this 150 mark is not broken, but I do see a bit of upside. The question now is, how do I find that entry, that bounce or the entry into this area? Now, the good part about, or the pro about this particular chart, it has done a break and retest, okay? It has done a break and retest. I believe on a shorter time frame, we could be able to find a small opportunity towards the upside. I'm very reluctant to short the dollar yen now, regardless of how high it is. So I would kind of thinking, well, we are still kind of bullish on the dollar and bearish on the yen, because the technicals are still quite valid and clear right here. Be a little bit cautious if prices are reaching 150. If price does manage to break and retest 150 to hit towards the next level, then, you know, I have no idea when it's going to hit, because this is actually almost a historical high. All right, so the next level will probably be either 151, 152, and the sky's the limit as long as the Japanese government does not change. And according to the Bank of Japan, they are still very reluctant to increase interest rates at this point. Whether or not there'll be intervention once it hits 150, we have to keep an eye out on what the news are saying over here. All right, so it will be interesting when price hits 150 for the second time. All right, so it hit here one time. If price hits 150 for the second time, we are going to see either two things. It's either the Bank of Japan is going to dig in its heels and say, okay, fine, they're not going to do anything and allow the market to do what it's going to do. And we should see price break and rocket over towards the upside with a question mark on where it's going to end. However, if the Bank of Japan is spooked and they do an intervention in the middle of the night somewhere around there, we might possibly wake up to a dip over here. And this can be very similar to what has happened over here in the past, right? So previously, over here, where the price actually hit a historical high of 150, the Bank of Japan got spooked a little bit. A bunch of intervention came out, the yield curve, etc., and price actually kind of sunk pretty steeply and pretty fast. Look at all those big red candles. You know, it just shot down all the way to this level before finding back up again. So here will be an interesting side with one eye on the news. As long as the Bank of Japan does an intervention, then we could see a dip very similar over here, possibly to at least a 145, 142 if, you know, the move is actually strong enough. So this would be an interesting point to note next week because we are very near it. So cautious longs on the dollar yen with an eye out on the news to see whether or not the Bank of Japan reacts once this area is hit a second time in 2 weeks. So this is the dollar yen I have for you. Now, based on some of the statistics I'm seeing, I do agree with Lloyd that the dollar still looks pretty bullish. So that is my currency to watch out for next week. The question is, what do we play against? Now, currency pairs that I think are still a little bit soft based on the statistics we have is the pound. And unfortunately, the pound has been going down for quite a while. Inflation rate is still high at 6.7%. Jobless rate is still not very pretty at 4.3%. Bearing in mind that now the euro, the euro and the UK are both having a big bug issue in the whole euro region. Will it affect tourism? Is it one of those socio-economic problems that will affect its economic problems in terms of tourism, in terms of, the newly opened tourist industry? I have no idea. All right, but if we think about it in a very logical form, if you know that the euro side and the US side has got a kind of a big bug situation at this point, are we going to pick that destination for a holiday? Which means will tourism kind of drop, which means the demand for the euro, demand for the pound. I mean, I'm segueing in a little bit of social economics, right? Depending on how much people are averse to going over there for a holiday. So there's a bit of social economics involved, but I don't see a potential, hey, let's all want to go to the UK and and the euro at this point. All right. So with a bit of social economics in mind, and that fear of, and this news of this bed bug issue being really blown out due to social media, I am thinking that, I don't think there's a bullishness coming into the euro and the UK at this point. In fact, I actually think that, it might either flatline, all right, because there's a lot of caution now in the wind, and the statistics aren't as pretty as well. For pound dollar, that's one of my pairs I have been looking at for a while. It has finally hit almost a 120. Now, I would ideally like it to hit a 120 before bouncing back up. So while I do think there's some retracement in play, but I would prefer to short this pair against the pound dollar just based off its high inflation rates. It's very slowly, sluggish recovering economy. Its economy isn't doing that fantastically based on the statistics. And comparing to the US, I think the US is still in a better economic space than that. So what I am waiting for the pound dollar is wait for those retracement points. All right. So we have a 3 candle up over here. Retracement last week. The question is this a reversal or is it a retracement? All right. So if price continues to retrace towards one of these levels over here, all right, then I am a bit I will be interested to continue to short it over here. The question is the question of when is the time. Now, next week, I think is going to be a consolidation week where price is trying to figure out whether it's going to break above this area or not. A little bit of technicals come into play, but I would still prefer the pound dollar on towards a short side over the medium to long term, as long as the US has not made the decision of lowering its interest rates yet. I think the pound dollar short still has a little bit of room to play over here. All right, now I will be cautious once the pound dollar reaches the 120 mark, because this seems quite like a pretty decent support level over here. So while price is still about the 122 level, I think there's still at least a 20 cents move towards the downside. The question is probably finding that entry towards the downside. So pound dollar short is one of the currency pairs I'm looking at. Now, very similar with Lloyd, I also feel the commodity currencies aren't in the best place, which means that we have potential opportunities in the Kiwi. All right, so Kiwi dollar has been consolidating for the longest time. All right, over here, this is the consolidation point we are looking at. The question I have is, if Kiwi dollar does not break above this, then I'll be very happy to trade the Kiwi dollar short with very cautious profit takings at the bottom of this range. Now, I don't know when the consolidation will end, but the Kiwi isn't in the best shape at the moment in terms of its statistics as well. If we look at its interest rates and its inflation rates over here, all right, you can see inflation is really high at 6%. So despite having a very high interest rate of 5.5%, it doesn't seem to be working to push down the inflation rate. So it's kind of a double whammy over here. High interest rates equals to higher liabilities, potential loan takings, etc. But prices are still high. It's not really doing anything in terms of pushing down inflation. What is working for the New Zealand is still staying above board. Quarterly GDP is still at 0.9%, which means at least it's not negative. I don't know whether that's a double negative or not, but it's kind of staying afloat-ish, but it isn't the healthiest of economies right now. New Zealand unemployment rate, let's take a look at it, has also popped up to about 0.2. Again, not the best of signs given that it's already facing high interest plus still consistently high inflation in the past couple of months, right? So I would be looking for potential shorts in the Kiwi dollar, all right? It's been consolidating since August to here. Let's see whether it'll break above this for a further retracement, and then we'll see whether we can pick it up maybe at about 0.61. But if the price doesn't break above this zone over here, then I'll be very happy to kind of take the shorts down towards the bottom over here. All right, so fundamentals, how I trade it is weakest versus strongest. The strongest, that the most robust economy we have right now seems to be the US dollar. So I am still a bit more biased towards a long USD. And if I'm looking for a slightly weaker currency, it is still the pound, it is still the Japanese yen, and now potentially the Kiwi looks like to joining on the softer side based on the statistics as well. So that's all I have this week. Thank you guys for joining me. Thank you guys for joining Lloyd. And any last words, Lloyd, before we end today's stream?
No, it seems like SGD is strong against the euro and pound. So that means on the Black Friday sale, I can buy more.
Yes, oh yeah, Black Friday sale. All right, let's shop on Black Friday sale. Yeah, well, speaking of dollar Sing, it has hit 1.37, it's below it. I do believe a stronger Sing dollar is coming up here towards the Christmas season. I hope at least towards the 1.35. I hope then we can do some Christmas shopping on Amazon.
Good shopping.
Yeah.
All right, thank you all.
All right, thank you.